affects the prospect of attracting capital. And then Greg will bring the broker perspective in terms of what are the dynamics to consider given his wealth of experience in capital raising. And then I think our legal speaker, Mr. Rizwani, will look at what are the legal issues that are likely to arise. But I think first, let me look at how, as the exchange, we were able to deal with or survive the COVID so far. As the exchange, I think immediately when the declaration was made that we are going into total lockdown, and of course we declared an essential service. We worked from home, and all the trading and the settlement was actually happening from home, although we had the pleasure to come to office anytime. But now that we are back, I think there's still some protocols that are followed. People put masks all the time. The BSE office is currently closed for visitors. We still expect people to contact us either by telephone or electronically, or they can just drop the mail outside our office and then we pick it from there. This is just to be cautious. But we have also, as an organization, because we value our staff, have offered some counseling services to our staff should they need it. We have also requested listed companies to do certain disclosures, especially the impact of the COVID pandemic on their performance or on their services, so that investors, when they trade, are able to know what are the likely effects of COVID on certain companies. I think majority of the companies managed to do that, and most importantly, I think most companies experienced delays in financials. We're able to help our companies. Some extended their disclosure in terms of dissemination of financial statements because they couldn't finish them on time. There is daily temperature checks for staff every day on arrival, and every staff member at the BSE were given 3 pairs of masks, sanitizers, and we monitor staff on frequent basis. And we've also kept a consistent communication with stakeholders, and we didn't disappear. We've always been there. But when you look at the certain aspect in terms of trying to make our companies to raise capital, we managed to issue a paper as a guideline to try to assist our companies in terms of what they can do to help their services or their production in the era of COVID. First, the paper addressed various fundraising mechanisms or ways that are actually there to be considered. Number one, companies can issue additional shares to raise capital because liquidity or having funds in this era of pandemic is very important. And therefore, when you are a listed company, it's very advantageous because you can come to the market, issue more shares, and when you issue more shares, investors will buy those shares and in return provide the much needed capital. The other aspect is you can actually issue shares in return for instead of paying dividends. That is, you give your shareholders more shares and then keep the dividends that you are supposed to pay to them because you'll be needing capital. And this is also good for companies. And there are various ways to raise capital in the market. You can also consider issuing debt instruments by listing a bond in the stock market. And I think it's one of the ways that is available to the stock exchanges. But when you look at the general performance, I think for those of you who want a comprehensive paper in terms of how companies, listed or not listed, can actually utilize the stock exchange to raise capital. The paper, I think, is readily available in all our various platforms, so I won't take long in it. But when you look at the relative performance of the market, you realize that the market on year-to-date basis from January to May end, the domestic company index, which is a measure of performance, have declined by 2.3%. And relatively, that's not too bad when you look at our performance against the other markets. When you look in terms of the US dollar performance, in order to compare apples with apples, the Botswana Stock Exchange have declined by 12.7%, but of course, in real Pula terms, we only declined by 2.5%. So this will tell you that the relative decline of the domestic company index in US dollar terms of 12.7% is largely because of the decrease in the value of the Pula against the dollar of about 10%. So it's 10% contribution by the decline in terms of the Pula against the dollar, and then 2.5% the actual market decline. And this brings you to about 12.7% decline in the performance of the Botswana Stock Exchange in US dollar terms. And then you compare this with about 28% of the drop or decline in Johannesburg Stock Exchange All Share Index, you realize that we are better. And then the Mauritius Stock Exchange declined by about 32.7% in US dollar terms. So US dollar terms, BSE negative 12.7% up to year end May, JSE 28%, Mauritius 32.7%. But when you look at a composite index, the measure of all emerging market as measured by the MSCI index, the decline is about 16.5%. So relatively, we are not doing badly compared to other markets. But when you look at the trading, the activity in the market, by end of May, the total trades amounted to about 273.9 million. And this 273.9 million is the equity turnover. The bond turnover is about 343.3 million. And therefore, the bond market traded much more than the equity market. But of course, as you will realize later on in my slide, majority of the bond trading happens outside the stock exchange. And therefore, as the BSE, we are working with the central bank and government in order to bring trading in the stock market. When you look at the size of the bond market, it increased to 18.3 billion from 17.3 billion. From January up to March, it was 17.3, and then into April, we had an increase of 1 billion issued bonds, and that is mainly because of corporate issuance and government issuance, which is a good mixture. On the ongoing activities in the market, we are progressing with the implementation of the Central Security Depository, which is the CSD. And the good thing about this CSD, like we have said before, is that investors are now going to be able to access their accounts, their trading accounts, online or on their cell phones. And I think it's going to make it easier for people to know how many shares they have at any particular point in time. We are also upgrading our automated trading system. The CSD, we expect it to be live, I think, October. And the automated trading system, I think it will be upgraded depending on the dynamics around COVID-19 around November. The upgrade in the automated trading system is the one that is going to be a game changer in terms of bringing the trading of bonds to the stock exchange. So it's an important development. The other new initiative that we have been working on over the years is the implementation of the new website, which will launch in the next few weeks, and the mobile app. They actually look very beautiful. We are at the testing stage, so I think in the next few weeks, these are going to be launched. The stock market ticker is operating. It's located at Zambezi at CBD. The prices that you see there are the prices that are traded on the stock market. So if you go to Zambezi Towers or the BSE offices, you can be able to see how trading is going in terms of the prices. But in terms of the other ongoing activities, just before lockdown, the Minister of Finance declared the BSE a self-regulated organization. I think the implications of this will be coming soon to explain them. What does it mean? But it basically means that we are going to be cutting a lot of red tape in terms of multiple regulation between BSE and NB-FIRA in our organization, in our entities, and I think that is an advantage to the market, and also I think it's international best practice, so it's some kind of development to our market. Introduction of virtual opening bell. This is the first one. I think it will go well, and then we'll do more of this in the coming months. One other thing that happened, I think, in the past few weeks is the suspension of African Alliance Securities Limited, and therefore all investors who have accounts at African Alliance should move their accounts to the other broker. Won't be charging them the transfer of the accounts to other brokers. African Alliance still remains suspended, but that doesn't have any implications in terms of the shareholding of the investors, and therefore investors can simply just move the accounts to other brokers. But their shares are very safe. I think that's generally all in terms of my broad presentation. I'm now going to give the baton to Boikanyo Mohami of Morula Capital Partners, who is now going to be giving us a general presentation or talk in terms of whether COVID affect the prospect of attracting investors. I think Boikanyo, I'll straight away hand over to you to just have a chat with us for the next 5 or so minutes before Greg comes in. Thank you. BK?
All right. Thank you, Thapelo, for the invitation and for the opportunity to speak. I trust everybody is keeping safe at home and observing all the protocols from the government. Just to start, I think it's important I start off from the point. The DCI has outperformed global markets on dollar terms, but I think it's important that we understand that there's a few challenges with the local equity markets, and primarily around the liquidity aspect. If you look at companies like Chobe, for example, Chobe's had no revenues, but the share price has been virtually flat. Given what's been going on also within the economy with the lockdowns and so forth, you would expect that banks are going to experience significant impairments. We've seen a trickle down which has been very, very slow. So I think the performance of the DCI needs to be seen in perspective, that the prices are stale, they are not reflective of the fundamentals on the ground. Unlike in other markets whereby there's been a swift reaction from the capital markets with regard to what's happening with the COVID impact. I think it's important that what has happened from a government standpoint, the government has taken swift action in terms of limiting the spread of COVID-19 by enforcing lockdowns and social distancing. This was very important to preserve the lives of Botswana, which is very important. The consequence of this has been to affect businesses adversely. Some of the sectors have been affected significantly, some have not been affected as much. Because businesses still have to fund some of the fixed expenses and the debt obligations, you'll find that a majority of the business are now facing liquidity and solvency challenges. These challenges can be addressed by funding from public markets and private markets. Currently, if you look at the pension fund industry, the pension funds invest about 40% locally in Botswana. primarily because of shortage of investment opportunities in the public markets. But this does not mean there is no opportunities in Botswana. Businesses in Botswana are primarily funded by the banks as well as development financial institutions like SEDA and BDC. Business loans from the banks account for about 23 billion. BDC has got investments of about 3.5. SEDA has got about 1.5. Collectively, they are looking at about 30 million in those segments. If you compare it with the BSE market capitalization, which has got about 37 billion, you can see that a lot of the funding happens outside of the BSE. From our standpoint, this presents an opportunity for pension funds. We've recently seen pension funds start to increase the allocations to private equity. Private equity assets now account for 4% of the total pension fund assets. Total pension fund assets are about 79 billion in Botswana. Typically, private equity use the public markets to sell down some of the investments or exit completely. We've seen a few of these happening recently from BDC. BDC has listed Cresta and Detroit in the last few years. COVID-19 has affected not only Botswana but other countries over the world. What we've seen is that global central banks have cut interest rates down aggressively, down to close to zero in some markets. Obviously, in Botswana, there's been a cut in rates also by 0.5 by the Central Bank of Botswana. We think, in our opinion, this presents opportunities for investors. Pension funds are facing global bond yields which are close to zero. Some in markets are negative, and if you look at what has happened recently with the Pula devaluation of about 10%, we think that it provides an opportunity for fixed income, which is higher yielding, to be invested in Botswana. We also think that in this current environment, the banks, which have been the biggest funders of the private businesses, banks are likely to reduce their lending to new businesses. And this is really because of two factors. The first one is that there's highly uncertainty with regard to the cash flows of the businesses. So you will find that banks will be very uncomfortable to extend new loans. We're probably going to see more restructurings happen within the banking sector rather than advancing of new loans. Banks also prefer amortizing loan schemes, and these are not appropriate for businesses which are challenged from a liquidity standpoint. Businesses will want flexibility in terms of their payment terms and so forth, given the uncertain environment. We think that going forward, this gives an opportunity for long-term oriented investors who've got the patient capital, which can be deployed attractively, taking into consideration the cash flow needs of the businesses in Botswana. Ultimately, pension funds can start investing in it. In our view, we think that there's a potential for pension funds to allocate at least 5% to private debt markets. This would equate to about 3 to 4 billion in assets, which will help in terms of stabilizing business debt. Businesses, in effect, can raise money in Botswana by listing equities and bonds on the BSE, by accessing private debt. This can be through BDC, SEDA, asset managers, or the banks, and they can also invest through the private equity. I think the key thing, given the uncertainty in terms of the current environment that we face, we don't know how long this impact is going to last. There's a lot of uncertainty in the near term. There's talks that we are looking at about 1 to 2 years before a vaccine is found. So businesses really need patient capital that is quite flexible. But the most important criteria which investors are going to be looking for will be looking for a return that will really compensate them for the inherent risk that they take in the markets. Thank you.
Thank you, BK, and thanks for the wide observation. That's Bikanyo Mohami of Murula Capital Partners. I think I'll call upon now Greg from the broker's perspective, to tell us about capital raising dynamics to consider, given his long service to the capital market and experience. Greg, I think let me hand it over to you for about 5 minutes to talk to us concerning the dynamics that capital raisers can actually consider.
Thank you, Mr. Taylor, and thank you for inviting me, to this forum. I take it we are all aware of the COVID-19, regulations, which essentially speak to hygiene adherence, the sanitation, the wearing of the mask and stuff like that. Hopefully, Botswana sticking to that, directly. Now, coming to the situation on the ground in terms of raising capital amidst the COVID-19 pandemic, I think what we've observed is that disaster or no disaster, there are projects that need funding. There are projects that need capital. So capital raising, presumably would go on. The reality though is, with disasters like the COVID-19 pandemic, markets get full. When markets get full, there is a natural reaction of, investors having heightened risk aversion. And with this risk aversion, it means the promoters of projects encounter difficulties with their ability to raise capital. We've had a few inquiries, very tangible, attempts at raising capital. And besides the would-be investors not being there physically because of the challenges of COVID-19, we've also had situations where, because of their aversion, they pretty much water down the fundamentals of the project. Their view is that whatever project the promoter comes with, they now see as, being far more riskier than it otherwise would have been, and therefore would, if they want to come in, they would tend to propose watering down the projects as that the valuations then, it suggests that the investor or that the promoter is now forced to consider a lower valuation, which consequently means trying to raise more money or, risking being fairly liquidated or rather diluted beyond where they had anticipated before these challenges. And unfortunately, this is a demotivator. It demotivates the promoter and could deter those with projects from trying to bring them up to the market, to new investors. Because at the end of the day, they would have put in their own money trying to create some value, which suddenly appears not as attractive anymore. So it then creates that problem of a mismatch between expectations of promoters and the expectations of would-be investors. We also spoke of there being financing outside of the market, investing outside of the stock exchange. I think that's the challenge. I think that the effort should be to bring that investment opportunity through the stock market. Obviously, in the case of BDC, we know that they've exited some of the investments through a listing, like the two that we could refer to. But it would be nice if that arrangement was widespread and ultimately all these entities ended up on the stock exchange to deal with another problem that you face, which is the problem of liquidity. The most listings we would have, the better liquidity would subject now. We having challenges of funding, even outside of the COVID-19 situation, where pension fund do not seem to, can I say, have a developmental agenda in their psyche, if you will. They don't see the need to participate in developing the market. They just want to invest wherever it is. In the case of Botswana, though, I think this is shooting ourselves in the foot, because we need a developed market to then create better opportunities for these pension funds. And we can't have developed markets without their participation, even at risk taking, if you will. More development, or rather more investment by them, more investment by them means development of skills in them. More skills means ability to create even more opportunities, more projects, more products for them. So perhaps as a market, we should be looking at convincing pension funds to have a more defined developmental agenda with regards to our market. Thank you.
Thank you, Greg. Thanks for your insights. Greg is a broker at Imara Capital Securities. He's the CEO, and he have been involved in a lot of capital raising initiatives. I'm going to hand over to Rizwan. Rizwan is the managing partner of the Silo Group. He's also the former chairman of the stock exchange many years ago. He is involved or have been involved in a lot of deals previously into the market. So I'll hand over to Rizwan to talk about what are the legal issues that are likely to arise. I mean, given the situation we are now and the dynamics at play. Rizwan?
Thank you very much, Thapelo, and may I also say a very good morning to everyone who's, I think we have to find the right terminology for this new technology. So for everybody who's tuning in, thank you very much, and also to my fellow speakers this morning for your very insightful comments. The way I'd like to approach the chat, as I think we're calling it over the next 5 minutes or so, is to divide my comments into two component parts. Firstly, I'd like to spend maybe a minute or so just talking to the audience at large on the broader legal consequences of COVID-19. And then in the second part, it's to hone it down into the potential consequences and implications in relation to a BSE or listed specific environment. So if I start with the bigger picture, I mean, the expressions that have been stated about uncertainty and about cautiousness in the minds of investors, in the minds of lenders, both commercial banks and development institutions. I can tell you that certainly that is there, and that there is a lot of restructuring activity that has already started, and I think it's only going to exacerbate once the market as a whole and the country as a whole begins to understand what the implications of this COVID-19 pandemic are, and what the consequences of lockdown on that. Obviously, certain businesses not having traded in a particular period of time, with a consequential impact both upstream towards lenders, etc., and downstream towards customers and clients, depending on which kind of business one is in. There are and will be, I think, significant issues arising in relation to, if I can put it broadly this way, labor force restructuring, employees and how employees are managed and treated fairly, etc. But I think with the inevitable specter of redundancies or retrenchments looming inevitably in certain sectors, notwithstanding the legislation that is currently in place, which says that for the state of emergency, which will expire after the 6 months unless it is extended by Parliament, then those are some of the issues which it is very important from a legal perspective, I believe, to predict the outcome or the consequence, and for customers and clients and companies looking to invest in the legal sector to take into account. So I regret to say that in that connection, it seems to me, and I'm certainly seeing evidence of it from some of the restructuring work that I'm doing and my colleagues at my firm are doing for banks, for development institutions, and even for some high-end corporate players, that these are things front of mind, and they're not going to go away. I think it was Bukanya who said that the vaccine is not around the corner, so everyone's going to have to adjust. Now, so that's a broader market picture. Now, having said that, when one comes to the BSE itself, it was very gratifying indeed to hear the CEO and the other speakers comment on the what I would call the robustness, comparatively speaking, of our bourse and our market, our listed market. Now, the good news in connection with anybody who is already a listed company on the BSE or intends to be or wants to seek raising debt via those means is the following. Before I tell you what that is, I think it's important for anyone who's been following regional or international news to know, for example, in the UK, in the UK lockdown period, which is currently still in play, a number of companies, yes, have fallen on very hard times, but the others have used this opportunity to raise capital. And so it is not the case that if you don't have the right story and you don't have the right governance and the right structures, that you will not be able to use this time to go to market. So I very much endorse the view that the BSE is and should continue to be looked at from that perspective. Now, in terms of the legal scenario around the BSE and schools, the good news there is that those rules have not and will not, as I see it in the course of this pandemic, suddenly become more onerous, or that they're going to have new rules put in place which makes things harder. In fact, you will have heard the CEO say that we are in a situation where there will be possibly flexibility applied in relation, for example, to the publication of financial statements and so on. So I think that the way one needs to look at the BSE approach is, it seems to me that even this chat that we're having this morning is indicative of a mindset that says, look, guys, we are operating in what I think has become now almost a cliche phrase of the new normal. So what we have to do is we have to bear in mind that there is a new normal. Yes, there is a couple of issues to bear in mind. Clearly, if you are a listed company or a company that intends to list, you are nevertheless going to have to comply with broad national law. I mentioned, the bigger legal environment. It has already been mentioned that many people, many businesses are going to be looking at down the wrong end of a liquidity or insolvency scenario. So you're going to have to comply with the broader laws that relate to judicial management or liquidation if a company is in that particular environment. And if it is, then there are rescue structures that need to be applied. Obviously the BSE's rules are set a minimum standard for compliance. And if you don't comply with those, then there will be issues. But I think the key issue is, yes, of course, we have to have broad compliance with national laws. We are in a state of emergency. We out of lockdown. There are still some serious rules that are in existence, particularly in terms of attendance at premises and so on. So all of those, of course, make life from a practical point of view more difficult. But the key point I want to emphasize and underscore and get across is that you should not feel that because the practical environment is more difficult, suddenly the regulatory environment becomes more difficult. I don't think the two go hand in hand. And indeed,
there's some comments here from Jeff. I don't know if you're interested in touching on it after
and one
this.
looks at what companies need to do. There will be companies who will have delayed financials, for example, maybe what needs to happen, and I'm sure Tafello and his team at the BSE are looking actively at this, is in terms of issuing practice guidance notes or guidelines in terms of what, whether or not publication goes on. To take one example, and one must be mindful, of course, of taking examples from other jurisdictions. We have to tailor-make what we do in Botswana for the environment here, for Botswana in country. But for example, the JSE has relaxed, I should say, restrictions on the issuance of new shares for cash, which of course has a process and a procedure around shareholder approval. In an emergency scenario, they've dispensed with certain of those rules. So those are some of the things that I believe that maybe one can look at in conjunction with and in consultation with the BSC and its listings committee to see what can be done to be more flexible, obviously allowing people a bit more time, understanding that maybe their auditors were down or the business was closed for a period, so accounts are going to have an issue around that. So a relaxation of rules is something which I think within prescribed parameters could assist, and the legal implications of that would be that, you know, it would be for a temporary and short-term period of time, and may or may not apply to all of the entities which are listed. But, you know, obviously looking at the brokering community, looking at the investment community, looking at the pension, the investor community rather, the lender community, I think that this would be a good time to look at presenting, and I know the CEO is very keen on these kind of instruments, innovative instruments that are no longer vanilla in nature but can be used to tailor-make this environment, to make use of the environment to provide innovative products, so that, you know, when we come out of the doom and gloom of COVID, at least you will have had the benefit possibly of a more structured, a more innovative experience around this. Other practical issues that arise in relation to the legal consequences is, obviously, if you're out there and you're seeking to have undertaken a road show, whether it be for a rights issue or some other form of capital raising via the BSE, clearly the overall uncertainty may have forced you or caused you to say, let's pause a while, let's wait and see what comes out of this. But I think, you know, as with most things, those who pause will certainly be cautious, but those who want to perhaps forge ahead may find that with the right form of communication, with the right form of disclosure, that indeed one can make it work. And, you know, I wouldn't, as a market practitioner from the legal side, I wouldn't want to see, you know, complete inactivity because people are frozen and rooted to the spot. I rather think that rather than, you know, fear being indicated here, adaptability should be. And I'm pleased to say, although of course I can't go into any details, that a couple of the listed companies that I advise are in fact looking to do something in this period. Now, whether that achieves fruition or not will remain to be seen. But I think just then in conclusion, you know, sum up broader legal environment, yes, COVID-19 is going to and is already causing a number of issues. With regard to the BSE itself, we have a robust system, a robust set of rules. Those rules are not going to get more strict with COVID-19, but in fact, I think the BSE is adopting the correct approach in looking at what it can do to help its customers, to help its clients, to help its listed counters. There is space, I believe, for a flexible environment in conjunction with more disclosure, but looking at it from the perspective of what can we do in this time period of COVID lockdown. So, you know, the usual rules apply. You know, if you're looking to do something, get good advisors, plan your approach with your investors, make sure you've got clear documentation telling your story. It does not seem to me that the fact that we and the rest of the region and indeed the world are experiencing the pandemic, that should mean that business should come to an end. It doesn't mean that legal regulatory environments should of necessity get strict allow for greater flexibility there. Thank you very much.
Yeah, but thanks very much, Rizwane, for your comprehensive input, and you rightly point out that our present listing rules have some form of flexibility, especially when it comes to issues in helping our customers, especially the listed entities. You might realize that the BSE, in terms of facilitating trading, our trading fees are actually the second lowest in Africa. The JSE have a flexible, so they consider cheaper, but the BSE comes up with a sliding scale, and we tend to be far much lower. So I don't see us, in fact, lowering the trading fees even further. I think they are generally very low now as we speak. And then in terms of what measures are we putting in place to help companies to raise capital? Are we considering lowering capital raising fees? Are we considering lowering listing fees? I think the good thing about the COVID-19 pandemic is that there are quick responses around a lot of issues that ordinarily in the past were not tackled as quickly as they can be now. So one of the things that we have done as the exchange, which was a first step, even during the lockdown, we managed to provide guidance to the listed entities, to say to the listed entities, should you find yourself that you need capital, these are the ways in which to raise capital in the market. So that was the first level of response in terms of helping companies that might find themselves struggling with capital, to give them alternatives in terms of how can they actually go about raising capital. And of course, it's very true, Rizwane, that even our listing rules gives us that leverage as the BSE to even approve on behalf of shareholders, especially some capital raising initiatives that companies might find themselves in their need of capital. And then there's an ongoing assessment in terms of not only at the BSE, but globally. If you look at the member organizations of the World Federation of Exchanges, of which we are an affiliate member, indeed we are one of the stock exchanges that are able to submit in terms of how we are responding. And also the BSE, as the Secretariat for SADC, is also monitoring developments in the SADC region, both in terms of how, as regional exchanges, are we responding to challenges, and as a member of and as an affiliate member of the World Federation of Exchanges, how other exchanges in the world are really responding to COVID. So it's an ongoing exercise, as and when the pandemics unrolls, will still also mutate as the exchange and see what are the best things to do in terms of guiding companies, helping companies in order to do with the listing. There are a number of messages that came through. I think that is my closing remarks in terms of addressing them. But because the market opened at 9:50, we're supposed to ring the bell around that time. We'll close up with ringing the bell, and then if there are more questions that are going to be followed, I think the BSE staff, market development, is always available to answer questions. And I know Greg is always there, Buikanyo is there to answer questions, and Rizwane is also there to answer questions. But let me take this opportunity also to invite them to join me in ringing the bell. I hope they have got bells and on the side, and therefore the market will. I'll go ahead and ring the bell to open the market now. Thank you very much. So the market is officially opened, although we had a few technology challenges at the beginning. But I'm proud to say Buikanyo, Rizwane, Greg, I think your names will go down in history to having been part of the first virtual bell ringing in the history of the stock exchange in Botswana. And also we are one of the few stock exchanges in Africa that have successfully managed to do this. I think Nigeria have done it. I don't know whether who else have done it, but I think this concludes our virtual official June bell ringing. And therefore, thank you very much for participating. And all our listeners and our viewers, thank you very much for joining us. And all the other presentations will be loaded on our platforms. Thanks, Rizwane.
Thank you.
Thank you, Greg.
Thank you.
Thank you, Biganyo.
Thank you.
Thanks.